Do you want a financially secure future, not just for yourself, but for your loved ones as well? This is Generations of Wealth, the podcast that breaks down the most effective wealth building strategies you can easily apply to your own life. Join investor and international best-selling author Derek Dombeck in exploring practical tips and sound advice on building a profitable business, creating a powerful brand, or getting into the thriving world of real estate investing. This is your chance to create your very own financial roadmap to live your vision, love your life. Let's begin this discussion with your host, Derek Dombeck.
Welcome to the Generations of Wealth podcast, where we talk about building wealth that allows you to live your vision and love your life. I'm your host, Derek Dombeck, and today we've got another fellow Wisconsinite, which I absolutely love. Sean Tepper is with us. Sean's actually got a completely different background than I have, which is going to be a lot of fun for both of us because I think we're going to have a great dialogue of going back and forth a little bit. But Sean, you had developed a software called Tyker, I believe, and I really don't want to do it any injustice. So if you wouldn't mind, just give us a little background on yourself and just jump into it.
Sure. Well, Derek, first off, thanks a lot for having me on the show. Appreciate it. And then Ticker is the company name, like a ticker symbol. So yeah, I'll give you my backstory here. I'll try to take a few minutes. Hopefully you find a little entertainment within. So my background is primarily business with an emphasis on technology. In the 2000s, I actually built my first company. It was just an agency. We did a lot of websites and software for small and mid-sized businesses. Made like no money through the recession. It was actually 2006 to 2010. However, in 2010, we did get approached by a larger agency that saw that we were actually finally bringing on some bigger brands. And they said, hey, would you want to merge with us? And at that point, I learned a lot about a lot of different businesses because we served everything from like manufacturing companies to restaurants to automotive dealerships to I think there was like a hair salon in there. We even served a SaaS business, an e-commerce business, software as a service, SaaS business. And out of everything after 4 years, I was like, that's a business I want to create, something like Netflix or MailChimp or Salesforce. I'm like, that's pretty cool. But anyway, went through the merger and it wasn't like a check was written like, hey, here's $1 million. You can ride off into the sunset. You're retired. It was none of that. It was all debts and liabilities wiped clean. So it was like, okay, I get a fresh start. Now I didn't have any good SaaS ideas. So I decided, let's go work for larger corporations. And I wanted to do that for 2 years. That turned into 12 years until I could come up with a viable business option. But in parallel to that, it was around 2010 or 11, I started getting into investing. And it was more focused on what you could call angel investing, which is investing in private businesses. I thought I was a smart guy because I'm like, hey, I went through a merger or sold my business, kind of, and I can do the same with a tech business. No, you were dead wrong on that. So I did invest in a few private companies. I made some money and I lost some money, but after 5 years, it was break even. And I'm like, I could be swinging for the fences for the next 20 years, not making any money. This is stupid. So I decided, let's be smart about it, invest in public companies, no more private. And I turned right away to Warren Buffett and Charlie Munger. I'm like, I want to do this right. I want to learn it from the best of the best. So I went on the YouTube rabbit hole. I also read a ton of books, and there's a lot of fluff out there. But thanks to Warren, Charlie, and even another guy by the name of Phil Town, I was able to put together an Excel sheet. And now my background is primarily project management. I'm not a software engineer, but I have led teams. I built a lot of big software applications, and Excel sheets are like your best friend when you're a PM. But I decided to put this Excel sheet together, and I wanted to create a system that is kind of like a green light, red light decision-making process, because there's so many people out there on Twitter or Reddit or YouTube or wherever giving you good advice on what stocks are good and what's not. And I'm like, no. I want to cut through the clutter and really know what's good or bad. So I put this sheet together and created a point system. And real quick here, I was aiming for returns greater than 15%. And the reason is that's what Phil Town really emphasizes. And even Warren Buffett was like, if he was managing $1 million on up to 10 million, he could consistently make 50% returns per year. And I'm like, well, he's not a gambling man. He doesn't use emotions or feelings, right? Which tells me he's probably starting with some sort of logic. So that's why I created that Excel sheet. And over 4 years, I tested it with my own money. I was making returns between 15 and 50%. That still continues today. It's actually very close to 50%, but it was 2019. I started sharing this Excel sheet with a few regular guys like you and I that invest in the stock market, and just to get their feedback, like, hey, what do you think of this thing? Would you use it? And then I talked to a few people that work for corporations, and they were like, you should turn this into a software. And that was it. It's like 10 years later, I finally have a software idea that can actually solve problems, and it doesn't have a huge competitive network out there, other businesses like it. So yeah, it took a year to build. Went live in 2020, took 6 months to get the first paying customer, which was very humbling in itself. But I knew that. I knew I needed to get people on the platform for free to get feedback. And then with that feedback, just make it a better tool. And thanks to our audience and their feedback, we are now 3.5 years old. And we're going on 9,000 customers in about 50 countries. And then something we're really proud of is our Trustpilot score is a 4.9 out of 5. We're actually the highest in the industry. So real quick here, and then I'll turn it back to you. Our model is Ticker's business model is a screener and educational platform all in one. So if you want to know what stocks to look for, what stocks to avoid, when to buy, when to sell, all that good stuff, and really teach you how to reduce the risk along the way, that's what we do. You still need a broker depending on what we serve a lot of people in other countries, so there are brokers in every country. But here in the States, it's primarily like I use TD Ameritrade. Other people use Fidelity or Schwab. Robinhood is a popular one as well. But you still need a broker to connect your bank account and buy and sell stocks. So anyway, I'll stop there.
No, that's a lot to take in for a real estate guy, right? Because I understand everything you're talking about. Other than my first question is, you're in all these other countries. How do you have the ability to analyze stocks that are on a completely different market, or is it only analyzing stocks in the United States, and those people from other countries are buying United States stocks? Is that correct?
I can break it down for you. So what we do is this will give you a look under the hood on how Ticker works. And so people know we are the only platform out there that has open source calculations. And what that means is people can just go to our front facing site, ticker.com, and we've got an education tab. You can scroll down and there's calculations. And we tell people if you want to, you can go create your own version of Ticker, take our calculations and go. However, nobody has actually executed on that. It's actually harder to create a software than most people think. But just being transparent there has given us kind of a level up with confidence. And that's why we decided to do that. So what we do is we look at every business around the world exactly the same. And you'll appreciate this because what we look at, it's nothing fancy. We look at revenue. We look at net income, your profits. We look at EPS, which is also very similar. We also look at free cash and debts and liabilities and assets. What we want to do is we look at data over 5 years to make sure the numbers are growing year over year and quarter over quarter. With debts and liabilities, we want to see those numbers declining. But if we can't get 5 years, for example, an IPO stock that just went public last week, we'll try to look at a minimum of 2 to 3 quarters. And so it's very easy to understand when you look at this just by eyeballing it. It's like, oh, that makes sense. It's kind of like if you were to buy real estate, you probably want to find out, like in the history, were you able to make more on this, or was it a money pit? Right? Same thing.
It's essentially the equivalent of what we would have for a cash flow analysis on a rental property or a scope of work on a flip property. And so, no, that's awesome. And I like the way you broke that down. So since I'm the green person and the newbie here in your world, kind of give me like the number one strategy for building wealth with stocks to begin with. You know, what is a beginner like me who's been in real estate for 20 plus years? Now I want to diversify into stocks, but you know, admittedly, I love real estate because I can see it, touch it, feel it, control it. So I don't really take the time to go and learn stocks. So I love your platform. What do you tell somebody like me?
Yeah, so to take a step back, I'll kind of compare the difference because I've talked to a lot of real estate investors like you. I love you guys and what you do, the women out there too that are in this space. But here's a quick comparison, then we'll dive into how does a beginner really get started. So when my audience comes to me and they're talking about comparing the two, like, hey, should I invest in real estate or stocks? I'm like, here's the difference. So real estate, a big benefit, as you know, is passive income, right? That's beautiful. You want that passive income. Now with stocks, you don't really have passive income. You can buy dividends, but that's not really how you build wealth. It's compound interest. Now, the benefit with stocks over real estate is the appreciation rate is much faster. For example, you could buy a 250,000 home this year. Will it be worth $500,000 next year and then 750,000 the year after? The likelihood is probably pretty low. However, with businesses, because a strong business has so many different revenue streams, its share price can go from 100 in year one, 200 year two, 300 year three, and even further. So that's the benefit of stocks. You can build your wealth much faster, but again, there's no passive income. So knowing the differences there, here's how we help our audience. So about 80% of our customers are completely new. Now, like I said, they hear something on Twitter or YouTube or their next door neighbor or friend at their last holiday party is like, hey, you should buy this new penny stock because it's going to make you rich. No, it's not. Right. So what we do is we teach people the number one word people gravitate towards. It's not getting rich or building wealth or building your wealth faster than your buddy. It's confidence. That is the number one word we found with A/B testing people care about most is all they want to do is invest on their own with confidence. So we help them do exactly that. What we do is we tell people start small. You want to start with between $100 and $1,000 your first month. And it's kind of like that moment when you're a little kid jumping into the deep end of a swimming pool. It's terrifying. But once
Yeah.
you do it one time, after that, it's pretty easy. So we want people to invest pretty small their first month and then kind of ramp up thereafter. And use Ticker, of course, all along your way to know what stocks are good and what's something you should avoid.
So Ticker isn't necessarily giving them a list of stocks to investigate. They're finding their own list of stocks to investigate and they're plugging that into Ticker.
No, we actually have, as of today, 40,000 stocks around the globe. And how to give you context on our onboarding experience, once you sign up, it walks you through and helps you kind of like based on your interests, it give you a list of stocks to start with, and you add those to your watch list.
Okay.
And then you kind of know like what, okay, I'm interested in this, and then it'll give you other recommendations. And then we have a just high level here, I kind of explain a few details. We could even do a screen share if you wanted to go there, but we've got stocks, ETFs, which are a bundle of stocks. We also have crypto on the platform. However, crypto is not a business. We use it as a marketing play to bring in the crypto traders and show them like, hey, you can invest in crypto, but you probably want to invest like Warren Buffett, like stocks.
Yeah.
Then the watch list tool is my favorite because you can add stocks to it. And if anything changes with the score, you get notified. So if like something happens and like something's going wrong, you can sell and sell for a profit. And then we got a portfolio tracker as well. So you can track all your stocks in one clean location.
Okay. So I want to circle back just a little bit on a point you made when you're discussing the difference between stocks and real estate.
Yep.
You mentioned real estate being passive income. And I would, after being in this for 20 years, that's a fallacy in real estate. I mean,
Okay.
there is really no passive
True.
part to it. And that's to the benefit of stocks, right? Because not to say that at some point you won't be able to collect money and just have mailbox money like we all strive for and dream of. But my mailbox money still comes with phone calls from managers or, there's always problems. And, as much 2 days ago, I have a passive investment in a duplex and I have a passive tenant's sister who won't leave, So there's nothing passive about it. I took my wife out to dinner for her birthday and I was serving a notice on a tenant because they won't leave. So I love that people have that dream of being passive in anything, but there's still going to be an active role. It's not.
You're right. You're right.
which is good though to discuss and be open about, because
Yeah.
that is what we do, right? Like there's a lot of fluff out there, and there's a lot of stuff everywhere on YouTube and the internet about the how easy a lot of what you do and a lot of what I do is. And the reality is it's easy in theory, like it's not hard, but it takes effort.
Yep.
And even for me discussing this with you this morning, and realizing we're both natives from Wisconsin, and we've got a lot in common. I've spent very little time in my life even studying stocks at all, because quite honestly, there's not been something like Ticker for me to push the easy button, so to speak. But there's a lot of other things that you can teach us. Like I know that you had mentioned in a previous before we started recording, there's 4 pillars of money management. Can you kind of discuss that and talk to us about that?
Absolutely. So I'll kind of break down, or I'll give you the 4 and then we'll dive into each. So the first pillar would be debt removal. The second pillar would be increasing income. The third pillar would be increasing wealth. And then the fourth pillar would be wealth protection. So where Ticker falls is increasing wealth. Now, there are a lot of people out there, and I'll do a call out to Dave Ramsey. I really respect what he's done with his bit. He's got so many revenue streams. He's got some really great products. His app is going crazy. But Dave is really focused on debt removal. And I appreciate that people kind of need to get control of their expenditures and don't buy that brand new Tesla Plaid, even though you should have went with a used Camry, right? It's stuff like that. Like, okay, get that under control, but don't live there. You want to graduate up to, okay, so how do I increase my income? All right. In many cases, an easy way to do that is get your resume polished and learn how to do a job interview to level up in your current career, or go get a job and a pay bump somewhere else. I've worked in IT. IT jobs usually do pay pretty well. So how do I get into a field of IT? It's that kind of stuff. Or somebody wants to learn how to invest in real estate. Okay, I'll keep my day job, but how do I buy another property to start making some income? So that's all increasing income. Then increasing wealth is like, how do we flip that equation from working for money to get money working for us? And that's that compound interest, as I think Einstein has been quoted as saying, it's the 8th wonder of the world, right? How do we do that? Make money work for us. And then that 4th pillar, wealth protection. And I'll drill into this a little bit, which is there are people who are nearing retirement or financial independence, or somebody who, let's say they sold a business, maybe they sold some real estate, or they inherited capital from a loved one that passed away. In that case, you want to kind of remove temptation from the equation. Don't put it in a savings account, because you could end up spending that money. Put it somewhere else so it's protected. That's why in that case, we work really well with financial advisors and wealth managers, because when people hit a certain level, we're like, okay, time to remove temptation. You can certainly invest in on your own, which you can use Ticker, but keep some of that in Ticker and continue using Ticker. But let's go put it with a financial advisor so they protect that capital. So there's the 4 pillars.
Well, what I love is when you're talking about the wealth preservation. And for myself and my wife Tracy, we've had our kids involved in our real estate business from early ages. And currently, my oldest is 17. She's involved in a lot of aspects of our business, including property management and working in some of our events that we have, our Generations of Wealth voyage, which we do on a cruise ship. She's very much involved. And so we encourage all of our real estate investor friends that come to our events to bring their families, to include their kids. How can, and maybe it can't, but can Ticker be used for people to help their children learn how to properly invest in stocks? And is that something that you've done within your own network or your own family?
So what's interesting, looking at our data, the usage on Ticker, it's almost the same between ages 18 and 55. And then after 55, it kind of drops off a little bit. So we are getting kids that are like, hey, I want to invest in stocks. And how do I do it wisely? Now, kids can't outright just create, sign up for a broker and then they're off and running. So the best way to go is most brokers have what's called a custodial account. And what it is an account that you share with a child that's younger than 18. And that way you can monitor like what they're investing in, and you're really owner of that until they hit 18, and then they can kind of go off on the running. So I'm telling friends these days, instead of going into what is it? I'm going to Google, is like a 429 account or something like that. It's like an account that you can start putting money into for college. Well, today's day and age, college isn't always the most economical solution. It doesn't have the biggest ROI. But let's say you want to put money away for your child. So maybe they want to start a business, or maybe they want to get into a tech school, or maybe real estate, or whatever it is. But I want to put money away. I say, go create a custodial account with your broker. And that way, every birthday, every holiday, maybe they're making some money over the summer, they can sock that away and get money working from them. I tell you what, I wish I would have done that when I was in my teens. Where I would be today would be unbelievable.
Yeah, 100%. And I started my real estate journey fairly early in my 20s, but got my butt kicked in 2007 and pretty much lost
Mhm.
everything. So
Yeah.
yeah, but that is also what really put me in the position I'm in today, is the failures that I had gone through.
Yeah.
And I know that you had talked about earlier, you sold your previous company,
Yeah.
so to speak, but it wasn't some huge windfall. It was the knowledge that you got from it. And that's something that I think most people don't really realize or want to even think about. You're likely going to have failures. You're going to lose money. We're going to have bad real estate deals. It's a matter of having more wins than losses. Having a decent batting average, right? Uh, what was your big aha moment early on when you sold that first company?
Yeah.
I'm assuming you had some maybe some doubts about your future. What did that feel like?
Yeah, to be honest with you, I was a little frustrated with myself after that, because I was like, I didn't make any money off that. And I just spent 4 years of lost time, opportunity cost gone. And I was like, okay, pick yourself up and let's go start working for bigger businesses. And at that point, I knew that I need to figure out a way in how to get money working for me, because a service business, if somebody's working a service business, you could be an accountant or an attorney or a website designer or a podcast editor. That's fine. Do it because you love it, but it's very much trade your time for a paycheck. And I knew like I never want to go back to that. I never want to do that business again. I want something that can create that residual income, and it can grow, it can scale. I can add a lot more revenue without adding liabilities. So I start working for bigger businesses to learn how they operate, how they market and sell. That was great. And it wasn't until about 2, 3 years later, I decided to go look at all the customers that I once worked with. I had a folder I saved, and I had a folder for it wasn't just customers, everybody I pitched. And I looked at the bottom, there were 400 folders. I'm like, wow, 400 different businesses, and we probably served about 100. But I knew after talking to people through the years, I seemed to understand different business models much easier. And I have to thank God for that opportunity.
Mhm.
4 years of not making money, but I have so much knowledge. It was really the foundation of investing that helped me kind of understand different business models and what's scalable. Now, I will say this, anybody using Ticker, you don't need that kind of background, but I I was thankful at the end of the day, but at first I was like this, it was painful. So
So what is just because our tagline is live your vision, love your life, what is your vision for the future with not only Ticker, but just your business in general? Are you looking for massive growth? Are you comfortable? What do you want to do? And what can our community do to help you
sure.
as well?
Well, I try to think about, and I learned this working for big businesses. I really appreciate some of the people I got to work with, is really a high focus on the customer. Like, for example, one company I worked for was Kohler. Kohler is great. They make really high quality products. But I remember sitting in a meeting with the CTO, and I think and the CEO wasn't in the same room, but there was this common thread of like, provide a gracious experience from A to Z. And running Ticker from the beginning, I'm like, we're going to do that. Like when we first launched, our software was bad. It's not good, but I'm like, what we can control is how we treat people. So
Mhm.
creating that gracious experience from A to Z and really leaning into how do we help that complete new person to the market invest with confidence? So I will always maintain that thread with this business. Like, how do we help people invest with confidence? So that's the focus on the customer. Now, my own focus is, this is a SaaS business. I look at Netflix and I love tech. I've been in tech now, gosh, 15, 16 years in itself. And I know where a tech business can go. And I know like we could literally serve 1 million people with this platform easily. We need some partnerships, some people really sharing Ticker, but we also need a good network effect. Their friend shares it with their friend, and their friend shares it with 3 more friends. That we need that. So that's the vision over the next 5 to 10 years, is serving 1 million customers. I know we can get there.
So we just need, Generations of Wealth and other platforms like ours and your own to make this go viral. And
Right.
and then you'll have a new problem. You will be overwhelmed.
Right. I'm thinking, I'm praying for wisdom on that, because it's like, how do I, hey, yeah, that's cute, Sean. You can go for 1 million customers, but how are you going to get there? Okay, so I'm going to need the right team. I'm going to need customer service people and like, so like how I use customer service, it's like I don't talk to people with corporate speak, right? It's kind of like using language like "you bet" and "hey, welcome back" and like "go get them" and "keep up the good work with the stock market." It's that kind of language, and people resonate with that. So how can I find somebody to use that kind of language and know about stocks? I'm like, no, that's not going to be easy to find that kind of person. But I'm thinking about these things, my hiring timeline and who I need. So that will be a challenge.
Don't you think we could just go to Lambeau Field on a Sunday at a Packer game and hire some people there? They know how to say "you betcha" and "oh sure."
No, you know what? You're onto something, actually.
They're not going to be sober, but they're going to be friendly. So
Right. And can you talk about stocks a little bit? Okay, you're in. Let's go.
absolutely. Well, they could probably sell stock in the Green Bay Packers. It's publicly
It,
traded.
it doesn't really pay anything.
No. Yeah. I wonder what Ticker would say about investing in the Green Bay Packers.
I remember some friends that were so proud when they invested in the Packers. I was like, so how is that? What's your rate of return per year? And they kind of looked at me cockeyed and like, oh, they don't do that. So you're a shareholder, but you're not seeing any share returns.
Yeah, you're a fan with a stock certificate is what you are,
Yes,
which is still awesome.
it's
Well,
cool.
as we kind of start winding down here, Sean, what's a question I haven't asked you that I should? Just being a real estate guy, what should I ask you?
I would say, can anyone do this? And my answer is, I want to give you a really fun case study here you'll appreciate, which is a guy by the name of Ronald Reed. Anybody can Google his name. You'll find an article on CNBC. But this is a guy who's a janitor who built up a net worth of over $8 million. And the question is, how does somebody who's making close to minimum wage become a multimillionaire? Well, the answer is individual stocks. He wasn't just buying mutual funds and index funds and ETFs and letting them sit. He wasn't using a 401k on its own. This is a guy who knew Warren Buffett style investing. And even before Warren Buffett's teacher was Ben Graham. So Ronald Reed knew that. And he had about 10 different stocks. So stocks through the 70s, 80s, and 90s were GE, Dow Chemical, Johnson & Johnson. These are not sexy tech businesses that came out 2 weeks ago. These are like well-established businesses with great balance sheets and multiple streams of revenue. And he did that month over month, and he was able to build up a pretty sizable portfolio. So if he can do it, literally anybody can do it.
Yeah, absolutely. Well, I want to make sure that everybody has the ability to get a hold of you. You are willing to give everybody, my listeners, a discount, it sounds like. Can you talk about that a little bit?
Absolutely. Yeah. If anybody's interested, the Ticker platform, so people know it's a 14-day free trial, no credit card. So we tell people like, take the car for a drive before you take it off the lot. Like we want people to test drive it. And if it's your thing, great. If not, no worries. But after 14 days, if you do add your credit card, it's $15 a month or $99 a year. And you can use the code SAVE30. We'll give you 30% off every year or every quarter, whatever you go with.
And you'll be able to go to thegenerationsofwealth.com /Sean Tepper. It'll be in the show notes. and you'll be able to get that discount there. So, Sean, is there anything else that you want to add? Any way that people can contact you direct if they want to?
Two places. One is go to ticker.com. That's great. Any questions there? It leads right to you go to the contact page. Otherwise, I'm really active on LinkedIn. Anybody wants to connect with me, I'm checking that almost every day.
Okay. Well, I know I learned a ton from you. I may have to come down to your area of Wisconsin and have a beverage with you one of these days.
You bet.
Because today's the first day we got to meet, but in our pre-show discussion and just the last 30 minutes or so, it's been a lot of fun getting to know you, and I just appreciate your time. And I can't tell you that I think I'm going to have to go start buying some stocks now.
Hey man, if you got some extra cash laying around from real estate, I'd say put it to work in the market.
Awesome. Well, thanks again, Sean. And thank you everybody for joining me today along with Sean. Please follow us on social medias, like us, share us, tell the world about Generations of Wealth, and go out there and live your vision and love your life.
Thank you for joining us on another insightful episode of Generations of Wealth. May your newfound knowledge help you in leveling up your own strategies to get through the many obstacles to your money-making processes and bring you much closer to the financially secure life you truly deserve. Continue filling up your accounts and further polish your financial tactics by listening to more episodes of the podcast at TheGenerationsOfWealth.com. Because in your wealth building journey, there is no other way to go but up, giving you the chance to finally live your vision, love your life. That's all for now. See you on the next one.